when they do that overnight revaluation, I don't know how much you're going to see it go to its fundamental value. But what I can tell you is, like in Venezuela, that first overnight revaluation, it went up 3,500%. So what might take you $100,000 today that can still buy gold and silver versus maybe in the future it'll take a quarter of an ounce of gold to pay off that same mortgage. And Lacey Davis 4770 asks, why do the Asian markets keep pulling the price of gold and silver up and we pull it down? Well, because everywhere else in the world is more toward a physical gold and silver market. In the U.S., it's been more toward the paper or digital, the contracts that have been dictating the price. And since last January, the new trend that is evolving and unfolding are the physical markets that will be giving you good price discovery, because you don't get any good price discovery from Wall Street. That's all. Everything has been turned into a trade. You know, we think that it's supply and demand because we're told that it's supply and demand. No. It's traders that determining how much you pay for that apple or that gallon of gas or gold or silver or anything else. Why do we allow them to have that power? Let's take our power back. Together we can do that. So really, it's the transition that we're in, and that's why I keep tracking what's going on with it, because I will be very happy when we are inside of a true supply and demand market. Then you get good price discovery. And also, that's also when you would get gold and silver moving toward their fundamental value, although that really will come more with the overnight reset. And this just occurred to me, so I'm kind of diverged for just a second, because this is, even this one too. This is 2006. This is 1995. I don't know if you can see it or not. These are silver eagles, and they're tarnished. They have some tarnish on there. And a lot of people think that that matters. With the new stuff or with the old stuff, it doesn't matter at all. Don't clean your coins. Don't do it. Okay? So just a little aside, because I'm sitting there looking at it, and I see the big tarnish on there, which it's called toning. And I personally love it, but I'm just telling you, don't clean your coins. Okay. And there's Teresa Marie 1089 asks, Lynette, I don't understand what glint is and what it means. Can you explain? Also, same for arbitrage. Thank you. I executed my strategy when you were with ITM and so happy with my results. I'm so glad you did. So glad you did. And you can call us because we are absolutely here to help you. But okay, Glint is a credit card that has physical gold in your name, your gold in a vault. And you can use it for the first part of the strategy where you need liquidity. So it would work like this. First, you're going to use up this garbage, the cash, because it's most recognizable. But then the Glint as a Mastercard would also be recognizable, and you could take it into the grocery store or any store and pay for your purchases. And then what they would do is sell off however much you spent in gold. They would sell that off for you. So it's your gold in your account, but it has a Mastercard on top of it that you can use, and therefore it makes gold more quickly liquid and easier to use in the normal marketplace. And arbitrage is where you see an opportunity to buy something at a cheaper price at the same time that somewhere else it's trading at a higher price. So you buy it at the lower price, you sell it at that higher price, and that's your arbitrage. And if that was not clear, let me know. I'll try again. And Curiosity Nudge asked, please describe again how to use silver instead of cash, like 1 ounce silver coins, and explain about gold and other metals. This is actually a piece that I am working on right now. So if you can have a little bit of patience, I'm not sure that will be out next week or after, and actually it depends on when it gets posted too. Yeah, Mimi said they're on. But Curiosity Nudge, that is already in the works. So, and I think it will be much easier for me to show you at the same time that I explain it. So if you can have a little bit of patience, and if you let us know, or if you're working with a strategy specialist at Zang Enterprises and you let them know when we're coming out with it, they will make you aware, and we'll get that done. And then they'd also be able to walk you through it, which they can do with any of the pieces that I do. If you ever want to go through it more slowly and have your strategy specialist walk you through it, they have access to all of my work, all of it. And so we can make that happen too. And Casey Wood 1041 asks, Lynn, my mom calls me Lynn, but that's okay. If the COMEX can only settle in cash if they don't have the metal, does that mean that we're now subject to Shanghai? No, what that would be, if there is a demand for delivery of the metal itself, and the COMEX is unable to do that, yes, what they've done in the past, they will declare what's called a force majeure, and they will pay you out in cash and probably pay you a premium because they don't want you to complain. But the Shanghai exchange is going more toward the physical. And what's really happening is the power is shifting from the COMEX dictating everything. Maybe, I don't know for sure that it'll be the Shanghai exchange, but it will be the physical markets that would dictate it, and Shanghai is more about the physical metals. So it's not that we would be more subject to the Shanghai exchange. It is that we will be more subject to true supply and demand statistics. And Ernest DeBella, God bless you and family. Thank you so much. And to everybody that's watching it, and everybody that's not watching it too, frankly. In a video, you talked about 1/20th of an ounce of gold, that's this, to 1 ounce of silver ratio, and other talk about a range above 80 or below 60, 1 AU/AG, when making buying decisions. Can you talk about these ratios? Yes. So what this is this is a $1 gold coin, and that's why I say the ratio between gold to silver back in 1913 and earlier than that was a 20th of ounce of gold to 1 ounce of silver. Now, historically, and we got up, oh gosh, I don't know, as high as what, 110? That means the price of an ounce of silver was very low compared to an ounce of gold. Okay, so that's the ratio. How much is silver compared to how much is gold? That's the ratio. Historically, we have seen them go back to that standard ratio, or that original ratio, I should say, not necessarily standard. So that is a possibility that will happen again. And when you see silver outperforming gold like it has been doing recently, basically what's happening is that ratio between the price of silver on the bottom and the price of gold on the top is getting smaller and smaller. I will say, though, that in all of my studies on how gold and silver perform during hyperinflation, we will see that ratio like we are right now. We'll see that ratio narrow, but then once the hyperinflation becomes fully apparent, we will more than likely, if history repeats itself, see that ratio grow again. However, whether it's more narrow or wider, silver still maintains your ability to purchase the same goods and services. Gold expands your ability to purchase the same goods and services, and so there's more opportunity positioning. But right now, that's exactly what we are experiencing. Silver, in terms of prices, going up faster than gold. So while they're both going up, silver is going up faster, and that ratio is more narrow. I think someone said 59-1 or something like that. So that's the ratio. And will it get back to the 20-1? It could. I mean, historically, it has in the past, though not necessarily in a hyperinflationary environment, because in that environment, remember, gold is the primary currency metal, and this is what they reset the currencies against, is gold. So, and Lincoln 05H asks, with QE and Trump, do you expect inflation to exceed 10% in 2026? Yeah, I do. Now, do I expect them to report it over 10%? No, I do not, because they don't want you to understand what's really happening. And a lot of people have a tendency to deny their own experience, which is crazy to me, but they do. So, yeah, I definitely do. And in fact, I don't think it's gone much below 10%, even though they can report it at 2 3/4 or whatever, because what they constantly do is they change the accounting methodology, or they take things out. It's called hedonics as well. So like in the basket of food, maybe originally there was steak. When that got too expensive, they put in ground beef. When that got too expensive, they put in hot dogs. So we're not really seeing it, but John Williams from Shadow Stats that have been tracing that and was instrumental in establishing that index to begin with, he's been saying that it's been running above 10%, even regardless of what the manipulated and massaged numbers look like. So the answer is yes, I do think it will be well above 10% in 2026, though they may not report it at that level. And Organic Rebecca 2314 asks, pay off mortgage or buy silver? Well, for mortgage payoff, my personal preference is the slabbed gold, but in a very lower quality. But why not do both? Is it either or? Because you're going to be able to pay off your mortgage when they do that overnight revaluation. I don't know how much you're going to see it go to its fundamental value, but what I can tell you is, like in Venezuela, that first overnight revaluation, it went up 3,500%. So what might take you $100,000 today that can still buy gold and silver versus maybe in the future it'll take 1/4 ounce of gold to pay off that same mortgage. There's a whole strategy around it because real estate runs a couple of risks. Number one, you have to have the ability to pay that mortgage off. But why not do it with dollars that have absolutely zero value? We can still buy stuff with this. We can still buy gold. We can still buy silver. So you do whatever you're comfortable with. You have to do that regardless of what anybody says. But I am sitting on a small mortgage because I want to execute the strategy. Why pay it off with dollars that can still buy you something? Why not pay it off with dollars that have zero value, like right after they do the reset? So give us a call. We'll go over that in more detail because surprisingly enough, we actually have a real strategy. We just don't say we have a strategy. That means that there's a method to what you buy to get in, but it also means that there's a time to exit. Having said that, you should always have that foundation of sound money in your portfolio. What will vary is the kind of sound money that you hold, the quantity that you hold, right? So for me, I've chosen not to fully pay off my mortgage because I will be fully paying it off, well, not with this, but with gold when I get that overnight revaluation. But you do whatever you're comfortable with. And Marianne, Texas asks, talk more about confiscations of our home gold and home silver. You know, they don't want pushback, and they don't want you to actually know what they're doing, particularly in this country that have indeed confiscated gold. I know I kept saying 3 times, but when I did a piece recently, 5 times in the U.S. alone. But they did not come knocking at your door. Rather, this is what I think it will look like. Let's just say that spot gold is at $5,000 when they decide to do an overt confiscation. And they will call upon your patriotic duty to turn in the gold, but they will pay you a premium for it. So they say, well, turn in your gold and we'll pay you $7,000. Well, most people believing Wall Street, I don't know why they do, but they do, will go, but wait a minute. This is only worth $5,000 and they're willing to pay me $7,000. They'll do a big, huge sweep of the IRAs because that's where most of the gold, if you're in the US, that's where most of it's held, private citizens anyway. So they'll do a big sweep and they wouldn't get a lot of pushback because people think they're getting a deal. When have you really known any government to give their citizens any kind of real deal? I don't see them knocking on the door, but I do see them making it challenging, if not impossible, to use it in the real economy. And remember, if you're executing the Zang Enterprise Sound Money strategy, you need to be using it in the marketplace because it's about holding your purchasing power intact and then, sustaining a standard of living, protecting any fiat money wealth that you've managed to accumulate, paying off any fixed rate debt that you're sitting on, and then being in a position to take advantage of opportunities that present during this crisis, as well as building a legacy to leave your children in a better position than they will be if you don't do this. So when you're looking at all of that, inflation is a form of confiscation that impacts you at the home, but they're not coming knocking on your door. Taxation is a form of confiscation. Royalties are a form of there are so many different forms of confiscation. They just name it differently so you don't realize that that's what they're doing. But isn't it time to say no more? Well, how do we do that? The global sound money movement, that's how we do that. We demand sound money, redeemable gold back in the system again. So if they do that, no more confiscation. It doesn't eliminate inflation if it's partial, and you can see that on the purchasing power charts as they were removing the gold backing over time from our currency because they need more flexible currency. Yeah. Gold is flexible in terms of price, but anything physical, there is a finite amount. So there are lots of forms of confiscations that are taking place and have taken place your entire lifetime. They prefer to do it covertly so that they get your cooperation. And if they were to do an overt confiscation, the most likely outcome is that they're going to pay you a premium so that you go along with their plan. And if it's in an IRA, you're not really going to be able to say no. If you hold it outside, remember my Uncle Al, he was sitting on at least 3,000 ounces. So that's it on confiscations. And the fact of the matter is we want to be able to take advantage of those opportunities that present. So you got to hold your purchasing power. And Uncle Al, he had at least 3,000 ounces of gold in this form. They weren't slabbed yet. but they were in this form, and that was legal. Remember, that would have been 1964 when it was illegal to hold more than 5 ounces of gold any other way, but in collectible form.